In the trading world, statistics are brutal. Over 90% of traders lose money, and only a tiny fraction, the top 1%, achieve consistent, long-term profitability. What separates this rare group from the majority is not just strategies or indicators, but the way they think, act, and approach the market. Trading is not simply about predicting price movement. It's about mastering discipline, risk, patience, and self-awareness. Most traders chase signals, rely on luck, or fall for emotional decisions that destroy their accounts. But the 1% operate with military-like precision. They know trading is a game of probabilities, not guarantees. They focus on risk before reward, process over profits, and patience over instant gratification. While others get lost in noise, they stay consistent, calm, and resilient. The truth is, the top 1% do not have access to secret strategies hidden from the rest. Instead, they refine simple concepts, execute them flawlessly, and avoid the pitfalls that ruin average traders. They understand that success in trading is more about psychological mastery and disciplined habits than about complex tools. In this breakdown, we'll explore the 6 key things that the 1% of traders do outstandingly well, habits and mindsets you can adopt if you want to join their ranks. Subscribe to our channel to get more insights like this. 1. They treat trading as a business, not a hobby. The vast majority of traders approach the market with the wrong mindset. They see trading as a side hustle, a hobby, or even a form of entertainment, something to check during free hours, or a quick way to make extra money. The problem with this mindset is that it naturally leads to casual habits, taking random trades, chasing signals, skipping analysis, or trading emotionally. In contrast, the top 1% of traders treat trading like a serious business, with structure, discipline, planning, and accountability. Think about it. No successful business survives without proper systems, budgeting, record keeping, and strategy. You wouldn't open a restaurant without a business plan, financial projections, and contingency strategies. Yet many traders dive into the market with nothing but hope and excitement, expecting to figure it out along the way. That's why they fail. The 1% knows better. Successful traders build a trading business model around themselves. They set clear goals for monthly and yearly returns, establish risk management frameworks, and track every trade like expenses and revenue in a company. They don't just ask, "Did I win or lose this trade?" Instead, they ask, "Was this trade aligned with my plan? Was it executed with discipline? What can I refine next time?" This business-like evaluation ensures continuous growth and accountability. Another factor that makes the 1% stand out is capital management. A business owner knows that cash flow is the lifeline of their company. Similarly, top traders prioritize protecting their trading capital over chasing high returns. They understand that without capital, there is no business. They allocate funds wisely, avoid over-leveraging, and always think about sustainability, not quick wins. Additionally, the 1% understands the value of investment in tools and education. Just as businesses invest in better equipment, marketing, or training employees, elite traders invest in quality data, trading journals, mentorships, and continuous education. They're not afraid to spend money on improving their edge, because they know the returns will compound over time. Average traders, however, see such investments as expenses instead of necessary growth tools. Another critical part of treating trading like a business is time management and consistency. Business owners work structured hours, follow routines, and make data-driven decisions. The best traders also have set times for analysis, journaling, reviewing trades, and execution. They're not glued to the charts 24/7, gambling every market move. They're methodical, focusing only on opportunities that fit their plan. This prevents burnout and fosters long-term consistency. Finally, The 1% of traders operate with a professional mindset of accountability. A business owner doesn't blame customers, suppliers, or employees when profits dip. They take responsibility, evaluate weaknesses, and adapt. Likewise, top traders don't blame brokers, the market, or external forces for their losses. They know every mistake reflects back to their choices, discipline, and execution. This level of ownership separates them from hobbyists who constantly seek excuses instead of solutions. In summary, the 1% are not gamblers in front of a chart. They are business operators managing risk, capital, and opportunities with precision. By adopting this business-like mindset, you stop approaching trading as a lottery ticket and start treating it as a professional endeavor. The market then shifts from being an enemy you try to outsmart into a business partner you learn to work with. Key takeaway: if you want to join the 1%, you must run your trading like a company, plan it, track it, invest in it, protect it, and grow it with discipline. Hobbies cost money, businesses make money. Subscribe on our YouTube channel for more insights to help your trading journey. 2. Mastering risk management. The top 1% of traders understand that success in trading isn't just about making big profits. It's about protecting their capital. They treat risk management as the foundation of their strategy, never risking more than a small percentage of their account on a single trade. Unlike average traders who get caught up in greed and over-leverage, the elite traders know that survival is more important than speed. They see trading as a marathon, not a sprint, and they prioritize longevity. They calculate position sizes meticulously, set stop losses without hesitation, and accept losses as part of the game. This discipline allows them to stay calm and consistent even in volatile markets. What makes them outstanding is not that they win every trade, but that they control their downside so effectively that when the wins come, they compound over time. Their mindset is built on patience, discipline, and the understanding that preserving capital ensures they can always come back stronger the next day. Risk management is their shield against emotional impulses, ensuring they trade with logic and longevity in mind. 3. Emotional mastery and discipline. The elite 1% of traders know that trading is more about mastering emotions than reading charts. Most traders fail because they let fear, greed, or impatience control their decisions. The best traders, however, have trained themselves to remain calm under pressure. They don't chase trades out of fear of missing out FOMO, and they don't overtrade just to satisfy emotional urges. Instead, they follow their plan with laser focus, even when their emotions scream otherwise. They treat every trade as just one of many in a long journey, removing the personal attachment to winning or losing. When faced with losses, they don't spiral into revenge trading. When faced with wins, they don't get reckless. Their strength comes from consistency and discipline, ensuring that emotions never cloud their logic. This emotional resilience separates them from the 99%. By cultivating patience, focus, and emotional control, they protect themselves from impulsive mistakes. Emotional mastery isn't something they're born with. It's something they build through experience, self-awareness, and strict discipline. It's this ability to stay calm when others panic that gives them a true edge in the markets. 4. Long-term thinking over short-term gains. One of the biggest differences between the 1% and everyone else is their perspective on time. Most traders are obsessed with making quick profits. They want to double their accounts in weeks, even days. This short-term mindset leads to risky trades, over-leveraging, and emotional burnout. The most profitable traders, however, think like investors, not gamblers. They understand that trading is a marathon, not a sprint. Instead of focusing on what they can gain today, they focus on building consistent growth over months and years. Their goal is not to hit it big on a single trade, but to compound their capital slowly and sustainably. This long-term vision influences everything they do, how they manage risk, how they handle losses, and how they track progress. They know that one trade doesn't define success. It's the hundreds of trades executed with discipline over time that matter. By removing the pressure of instant results, they free themselves from emotional decisions. They don't chase quick wins, and they don't panic after small losses. They embrace patience, knowing that compounding works like magic when given enough time. It's this mindset shift, from instant gratification to long-term growth, that truly sets them apart. 5. Relentless discipline and patience. One of the defining qualities of the 1% most profitable traders is their unshakable discipline and patience. They know that trading is not about constant action, but about waiting for the right opportunities. Unlike impulsive traders who chase every market move, the elites sit on their hands until their strategy aligns perfectly with market conditions. Discipline shows in their ability to follow rules, stick to risk limits, and avoid overtrading. They do not let greed, fear, or excitement cloud their judgment. For example, if their trading plan tells them to risk only 1% of their capital, they will never break that rule regardless of how sure a trade feels. Patience comes into play because profitable setups are rare. Markets are unpredictable, and the top traders know they cannot force profits. Instead, they wait calmly, sometimes 4 days or weeks, for the perfect alignment. Their mindset is similar to a sniper, taking only high-probability shots rather than spraying bullets everywhere. This patience also extends to results. They don't expect overnight riches. They understand compounding and let their accounts grow steadily over time. When losses come, they don't panic or chase trades. Instead, they evaluate mistakes, refine strategies, and stay the course. The combination of discipline and patience protects them from the traps that wipe out most traders: revenge trading, emotional decisions, and unrealistic expectations. It allows them to thrive long-term, where the majority fail. 6. Adaptability and continuous learning. The most profitable traders share one key trait: adaptability. Markets evolve daily. Strategies that worked yesterday may fail tomorrow. The top 1% understand this, so they never cling rigidly to one system. Instead, they treat trading as a continuous education. They study market shifts, adapt to new tools, and refine their methods constantly. They also recognize the role of humility. Profitable traders know they can't predict everything, so they stay flexible. If a setup isn't working, they exit without hesitation. If a new approach emerges, they test and learn rather than dismiss it. This growth mindset keeps them ahead, while most traders stagnate. Success in trading is not about finding the perfect system, but about evolving with the market. Continuous learning and adaptability ensure they're always prepared for the next challenge.